Hey everyone, welcome back to Financial Knowledge. Today we're diving into the world of investments. We'll explore the different types of investments out there, including stocks, bonds, and more. Whether you're a newbie investor or looking to diversify your portfolio, this video is for you. So, let's get started. Segment 1, Understanding Investments. First, let's quickly define what an investment is. An investment is essentially putting your money into something with the expectation of generating income or profit. Now, there are various types of investments, each with its own risk and return profile. Let's break them down. Segment 2, Stocks. Let's start with stocks, also known as equities. When you buy a stock, you're purchasing a share in a company. This means you own a small part of that company and have a claim on its assets and earnings. Stocks can offer high returns, but they're also more volatile. Prices can fluctuate daily based on market conditions, company performance, and even global events. Stocks can be categorized into various types, like common stocks, preferred stocks, and growth stocks. Common stocks are the most popular and give shareholders voting rights. Preferred stocks, on the other hand, usually offer fixed dividends and less risk, but don't come with voting rights. Growth stocks are from companies expected to grow at an above-average rate compared to other companies. Segment 3, Bonds. Next, we have bonds. Bonds are essentially loans you give to the government or corporations. In return, they pay you interest over a fixed period and return the principal at the end of the term. Bonds are generally considered safer than stocks, but offer lower returns. There are different types of bonds, such as government bonds, corporate bonds, and municipal bonds. Government bonds are issued by the government and are considered very safe. Corporate bonds are issued by companies and usually offer higher interest rates, but come with more risk. Municipal bonds are issued by local governments and are often tax-exempt. Segment 4, Mutual Funds and ETFs. Moving on to mutual funds and ETFs. These are investment vehicles that pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other assets. Mutual funds are actively managed, while ETFs, exchange-traded funds, are usually passively managed and trade on stock exchanges like stocks. Mutual funds can be classified into various types, such as equity funds, bond funds, and hybrid funds. Equity funds invest in stocks, bond funds in bonds, and hybrid funds in a mix of both. ETFs offer the benefit of lower fees and the ability to trade throughout the day. Segment 5, Real Estate. Real estate is another popular investment option. Investing in real estate can include purchasing residential or commercial properties, or even investing in real estate investment trusts, REITs. Real estate can offer steady cash flow through rental income and potential appreciation in property value over time. Real estate investing can be capital-intensive and requires a good understanding of the market. However, it can provide diversification and hedge against inflation. Segment 6, Commodities. Commodities like gold, silver, oil, and agricultural products are also viable investment options. These are physical assets that can provide a hedge against inflation and market volatility. Commodities can be invested in directly or through commodity ETFs and futures contracts. Investing in commodities can be risky due to price fluctuations and requires a good understanding of global market trends. Segment 7, Alternative Investments. Lastly, we have alternative investments, which include cryptocurrencies, art, collectibles, and even peer-to-peer lending. These investments are less traditional and can offer high returns, but they also come with high risk and volatility. Cryptocurrencies like Bitcoin and Ethereum are digital assets that use blockchain technology. They are highly volatile, but can offer significant returns. Art and collectibles can also be valuable, but they require specialized knowledge and can be illiquid. So, there you have it, a comprehensive overview of the different types of investments you can consider. Remember, the key to successful investing is understanding your risk tolerance, setting clear financial goals, and diversifying your portfolio. Always do your own research or consult with a financial advisor before making any investment decisions. If you found this video helpful, make sure to hit the like button and subscribe to Financial Knowledge for more insightful content. Don't forget to ring the bell icon so you never miss an update. Drop your questions and comments below and let me know what type of investment you're interested in. Until next time, happy investing.